Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Welcome everyone to the Week in Italian Startup, the latest edition. Welcome Nick, how's it going?
Ciao Jack, going well, going great. Ciao everybody, welcome back. What about you?
Yeah, very good. Starting week, first 2 weeks of January, hyper busy like you, I know. So it's getting back on track mostly.
I was reading a weird news that said that today, the second Monday or the third Monday of January, go figure, is the saddest day in the year. Like the real Blue Monday. For reasons, I don't know.
Okay. Maybe some nostalgic elements from the past year, new things coming up that people don't know what to do. That's an interesting news.
Yeah, I'll send you the link if you want, but it was weird.
That's so interesting. Okay, awesome. Okay, let's dive in directly, starting from maybe the biggest rounds. Let's maybe work our way from the biggest one, to the some smaller one. So starting with Sardexpay in particular, a credit payment network raising 4 million, and basically sort of pushing this new way of doing economic transaction. I thought it was, it's been on the radar for a while. I think it's an interesting way to think about e-commerce and the relationship between business and supplier. So maybe let's say something more about the business model, because it's pretty interesting actually.
Oh yeah, it's a fintech startup with a very specific approach. That's basically to facilitate the exchange in between businesses, in relationships of supplier and a customer. Okay, by using these credits that the platform gives to the members of this marketplace, and this credit will facilitate the exchanges on the network, on the platform. So it's a way to create sustainable and trustable relationships among players in a specific economic area. So it works very well in regional areas where you can basically select the participants of the marketplace and provide them with this credit that they can spend and exchange on the platform.
Nice.
So it's interesting. So it's a model that it exists. It dates back to the 30s, with 1930s from there's a Swiss bank.
Wow, that's cool. I didn't know that. That's interesting.
Well, I think the name is Wir Bank. That created this type of, that's not exactly a virtual currency. It's not a currency. It's a credit, a token that you can spend on the network. You join the network, you get these tokens that you can spend, and the incentive is to use them, so to make the economy work in the network. So it's very
it's fully leveraging the networking effect between basically economic player, without all the stigma that the crypto raised in the past. And actually Sardex was started way before all the crypto boom. So that's also what is interesting, that it still is actually resilient as a model. If that's something on a local basis, that can be an interesting way to build a resilient business.
No, it seems it's doing exactly that. Starting from Sardinia, and it's spread out to other Italian regions, and it's still developing. Of course, it's a network-based type of startup, so it requires time. But then you have this type of avalanche effect as more players want to join the network because other players are in the network. And then, this momentum is building up right now. And that's probably one of the reasons why they managed to convince Paolo Galvani to become a chairman of the company. That's probably the most interesting piece of news here, because Galvani is the founder of Moneyfarm, among other things. So he's someone who knows what it means to create something that it has to manage a huge volume of finance. So very interesting addition to the team in this case.
And that's a great signal also to the market, for sure. I mean,
before that's an international flavor in a sense.
Exactly. Awesome. So moving on, EvenFi peer-to-peer lending platform raising 2.2 million from Pacific Capital Partner. So let's talk for a second about peer-to-peer lending. Peer-to-peer lending, in my experience, was really where the fintech boom sort of started. I remember being in university and kind of navigating this really weird, like beginning, like peer-to-peer lending site. And it kind of evolved. It's still holding up. And what EvenFi has been doing, which is very interesting, is really helping small and medium enterprise in Italy. So business with not only digital business, but like let's call it real business, just because they work in real life, and support them through loan with a very interesting interest rate over basically between 8 and I believe like 14%, and the loan go between 2 months up to 12 months in different structures. And that's very interesting actually, because there is a selection of businesses you can invest in, and it's between the next restaurant opening up to maybe some other business in biotech. So it's really a big variety of businesses there.
Yep, totally agree. This is a model that's not new. There's probably the famous player here is October. So a platform for peer-to-peer lending towards SMEs. That's active in Italy actually, but I have to say I don't see very often Italian projects over there. But at the end of the day, it is a very interesting model because it allows smaller businesses to get access to credit, as you said, at the interesting rates. That's probably the key point here. And it allows investor to get access to interesting interest fees. So even if you're a very small investor, you can diversify that of the traditional bonds into the, as they say it, real economy. So that's probably the selling point to retail investors here.
Totally. And the investment amount is also super approachable, as you were saying, from €20 up to I believe like 3,000 or 2,000. So it's really
a few thousand, yes. Exactly,
a few thousand, so super acceptable. And rates are way beyond like the risk-free rate. What is cool?
Yeah, remember one thing, please. We need to repeat. This is not investment advice. So if you give some money to enough SMEs, quite a few of them will not give that money back for several reasons. So that's risky money. So that's why interest rates are 8%, 7%, 9%, whatever. So please, this is not investment advice.
Good thinking, Nick. Excellent. I always forget that. That's a great point. What I really like though is really that the sort of classification of business also include a risk profile. So really investor can sort of understand better how exactly how risky is that particular investment in general. And it really gives a nice way to make a decision on the investment. So it's definitely toward transparency. It's definitely like a well used and well tested model. So it's probably like one of those trends like still here to come. I mean, you're not becoming a millionaire through this, but definitely it's a nice way to diversify a tiny piece of your portfolio, especially for retail investors.
Yep. Again, not investment advice. You may lose money even by investing in this product. But you touched upon an interesting point here, the risk management part. So the credit risk evaluation, because that's probably one of the key recipes that all of these players have. So try to understand who's the bankable player that the bank would not want to serve because for some reasons they don't want to, but you feel safe enough to get as a customer. So this again, we are in the year. We've been in the year of data and machine learning and data analysis and so on and so forth. So I think that's the the playing field for all of these capital providers. So pulling the right levers between risk and safety of having this type of businesses raising credit on your platform. So I believe that's a huge bunch of technology over there. That's basically most of the value of these providers. The second type of value, of course, is the network effects, the ability to build supply and demand for this type of marketplace. But nice.
Interesting. Definitely. Moving on, KaraokeOne, a karaoke startup raising 1.5 million from CDP VC and other investors. So as I was mentioning to you, I mean, karaoke is still there and pushing and, being present. And these guys are trying to basically make the karaoke experience as, digital friendly as possible. It's a fun one. It's significant that actually, they basically managed to raise money to push the business. So that's definitely a good point toward them, and definitely worth mentioning. Not a small raise at all.
Yeah, no, that's not a small round. And as you said, I was surprised as well to see that karaoke is, that's a thing. Karaoke is a mature, widely spread, used type of entertainment. And apparently there is a good demand for a digital version of it on the market, enough to raise money. So very, very congrats to the team, to Antonio and the team for raising the money.
Awesome. Let's talk about edutech really quick. Tootor, edutech startup raising 800,000 from Azimut and Business Angel through a crowdfunding campaign. So Tootor is pretty much what could be defined the Netflix of dentistry, I would say. So it's really like a technical way to provide technical and professional information to a very niche audience of technicians in the space, dentists and doctors in general. And there is several hundreds video, very technical about operations. And the company is kind of taking, what I thought it was interesting was that the company was taking a very specific niche in terms of, education and kind of making it a Netflix style platform, which I thought it was pretty interesting and definitely very, aligned with a very interesting audience of customer, high paying customer for sure, that actually are high educated and they need this kind of like new information. So it was definitely like something that I've never seen before, but that's sort of the extreme edge of the education, edutech in general, I would say. So it's not our, big class sort of, online classes kind of thing. It's very extremely targeted.
No. Yeah, what I haven't, as you said, I was surprised as well to see a funding round. That's a crowdfunding round with the Azimut crowdfund participating in. But I was nonetheless surprised about such a niche type of content provider, content platform. Yeah. And I haven't run the numbers, but I would be curious about, back of the envelope thumb calculation.
Totally.
Just to understand what are we talking about, basically. Yeah. But that's me and my job taking over my reasoning.
Which is a great question, because videos apparently are in Italian, English, and Spanish. So that's they're definitely pointing toward the international markets in general. And a question that I had is that, okay, are they going to be influencers in those platforms where, the great doctor sort of having a good amount of subscriber because he does amazing videos and stuff like that? Or, that's a whole new sort of level of being a influencer, if you will.
Yeah, I don't know, but what I do know is that I wasn't there on the homepage of the website, and I don't want to be there anymore because of the videos. So they're not for me. They're not for me. That's for sure. Glad I haven't decided to be a dentist. Nice. At least for this reason.
Nice. All right, moving on. Italian antitrust authority fined Yoox Net-a-Porter €5.2 million. So this is a kind of a sad news on certain level. Well, there are some positive aspects, I would say, because that means that the entity that is regulating competition in Italy is very attentive and paying a lot of attention, especially lately, I would say. I was researching a little bit, and basically it's a very small office. They have like 3 main individuals that they take care of antitrust. In general, they're directly appointed by the Senato. So it's really like extremely, high ranking at least. And what is interesting is that they have the power to fine companies up to 10% of their revenue. So
we have got 3 people appointed by the Senate that have the power to fine everybody in Italy for doing something against, competition or the trust issues and sorts of antitrust issues.
So probably
it's like probably the most efficient office we have in Italy, including the entire private market.
I agree.
Must be. Or the most understaffed, that's for sure.
Well, that's what I found. I'm sure I can be disproven, like while there are like, secretary of the secretary of the secretary, kind of Italian style. But if that's the case, I'm very impressed because they are doing probably like a very efficient job. And I was also like rereading the filing that they did against Amazon in 2021, I believe, or 2020, where basically the Italian antitrust fined Amazon about $1 billion, I believe, because they were pushing vendors toward their logistics service and they were not being fair toward other kind of logistics services in terms of pricing. So these guys are there watching. So that's interesting. Going back to Yoox, basically, I think there is a point which it can be argued a little bit because there are 2 levels where they found like discrepancies and non-transparency. So the first level is basically pricing that were revised according to different discounts. They kind of came back after a few months at the original level. Well, that's pretty evident if that is really the case. And I don't know if that's the case. That's what I'm gathering from the limited information I have. Another disclaimer today. Then, yes, of course, that's definitely something, worth pointing out and worth fighting for sure. But there was not only the only point. The second point was also the fact that apparently Yoox had an internal policy according to which after a certain number of returns, product returns, customer can be sort of blocked from purchasing goods on the platform. So let's say I buy like 10 things, I return all of 10. And then after a certain limit, I'm not able to buy anymore, which I don't know. That's kind of a more gray area. The argument is that customers were not informed ex ante or ex post of this policy, which actually I think that's the crux of the big violation. But from a business standpoint, I totally understand where they're coming from. So yeah, I can see how, the pricing is kind of undisputable, but other kind of policies, there are some arguments there.
Mm-hmm. Fair point. Yeah, I agree with you. Interesting though.
Interesting.
I think that the pricing problem is, if you talk to anybody on the street, they will tell you they've got the very same impression about any retailer,
any store, exactly, any physical store. Retail. So that's a great point. Yes,
that's interesting, right? So either everybody's doing that, or everybody's thinking that everybody's doing that, or they're very unlucky. The Yoox team is very unlucky, and they were caught doing that.
Totally.
Anyhow, that's how it goes.
All right, yeah. But a good point. Antitrust need a broader eye also on the retail. It's quite a challenge. All right, so the tracker is back. The fundraising tracker is taking shape. So Nick, I'm glad you included with the new graphic. So for the people that didn't check out the newsletter, please go and check it out. Actually, no, it's interesting because with this year is 4 years of tracking numbers in terms of fundraising, keeping the same assumption. So I thought it was particularly interesting. As you were mentioning, you're basically focusing on equity rounds, and I think it's always worth mentioning because sometimes there is a little bit of confusion. So I would say, this tracker is really one of the purest form of what actually we can think when it comes to fundraising, for startups in terms of equity.
No, thank you, Jack. That's very kind.
That's true.
Trying to keep an eye open on what's going on on the market, and prepare yourself because in the coming weeks there will be quite a few reports about how the Italian market is going, and I think they will all tend to agree that Italian startups raised above 2 billion. Ranging from 2.2, 2.1, 2.3, 2 point something, whatever.
Exactly.
Yes, so we'll see those type of numbers floating around, which will include quite a bit of debit or almost Italian companies, stuff like that. So, but the basic idea is that in 2022 we had a record year in terms of fundraising, no matter how you want to look at it. But I'm more curious about 2023. So I'm not into predicting things because I'm not very good at predicting things, apparently. But I think the lower bound we can set is, the lower to target bound we can set is, replicate 2022. That would probably be a good starting point in terms of final results.
And on that note, let's definitely mention the EY Venture Capital Talk 2023 that you're going to be part of. I thought it's an event which people can subscribe online. They're basically, you guys are going to cover a lot in terms of data when it comes to the venture capital market in Italy. And what I was also curious about is that we're really covering a lot, including corporate VC, how corporations are actually intervening in the ecosystem, which it's a topic I really enjoy. And any insight from this from your intervention
well, really, I will just touch upon the exit market for Italian startups, and there will be 3 basic points I want to make. So, but the basic one is we are so behind. So we really need a good exit market.
Interesting.
That's, I'm an investor, so my returns are based out of exits, but exits would inject liquidity into the system, not just back to investors. Yeah. And that's something that we're still missing on the market. So, I don't know whether the current market conditions will facilitate it going forward, but we still need some work to do.
And do you think is a problem that's going to be solved with speeding up the IPO process, or actually getting into the market bigger player that can actually provide exit to smaller investors, like mid-sized investors, or maybe a combination of both? It's tough to say.
Absolutely. That's a combination of everything. I have to say that in terms of a complexity of getting listed, Euronext, so the French, I believe, company that acquired the Borsa Italiana, they're doing a good job in a sense, because last year, and then I'm anticipating something about my points on Wednesday. Last year we had this new professional segment. That's basically it's a public market, but only for professional investors, trading a minimum ticket size, minimum amount on the market. So, and it's easier in terms of documentation and efforts from the company. And I think that's a good starting point to have, to provide some, to facilitate going public and, setting up all the processes. But the point is that, let me make a totally different point here. If you are big with capital, with good metrics, we are talking about, 100 millions plus type of, enterprise value companies. I mean, the professional segment is not going to change your life because you have the cash, the money, the operations, the people to go public and, you know, sustain a public position. So the point is again about the market. The market needs to grow. Startups need to grow. We need later stage capital coming in. We need a lot of stuff to further mature our markets. So we have still some way to go here. But
awesome.
You are heading in the right direction.
Awesome. Nick, thank you so much for joining, and people definitely subscribe to the webinar, and I'll see you next week.
Thank you, Jack. Thank you, everybody. See you in a week.